simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally, and we do that by buying treasury bills. That actually increases the money supply.
Financial Turmoil Explained.
Good morning, ladies and gentlemen, and welcome to the show on this Wednesday, the 4th of May, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, I'm going to talk about why not deflation. You know, I hear a lot of them out there talking now about maybe deflation's coming. And, you know, yes, deflation would be the result of what's happening. And why not? Why can't it go that way? Why can't it suddenly swing into deflation? And that's what I'm going to try to explain in about the next 7 or 8 minutes. I'm going to take to try to explain why it won't be deflation, why ultimately it's going to be inflation. Right now we got an inflation rate that's hotter than they are admitting to. They were shooting for the Federal Reserve were having inflation rates for a long time that was below 2%, and they were shooting for a 2% inflation target. What happened was during the COVID crisis, they not only got their 2% that they were looking for, but they got a whole lot more because of all the fiscal stimulus that they did, along with monetary stimulus that they did during the COVID crisis. And so, at the beginning of the COVID crisis, you know, that we had that steep fall off in the markets, and then we had a lot of support that came in behind it that pushed the markets up to where they are right now. This included a lot of fiscal stimulus. What was called stimmy checks went out to the people. And this helped to push inflation up very high. Now, what kind of inflation are we actually looking at? Well, you know, I mean, with their numbers, with their metrics, we're looking at about 7 or 8% according to them, you know, CPI. But, well, you know, that's not really what the inflation rate actually is. By the old metric of measuring inflation, we're probably in excess of 15%, 15 to 20% per year. Inflation we're running at right now. So inflation's running really hot, probably hotter than it was back in the 1970s. Now, Paul Volcker came in and he stemmed off inflation back in the 1970s, but it took multiple tries. Didn't happen on the first try, and they had to get the rate of return on your bonds over the price of inflation so that people could make a profit. And when they did that, that's when inflation started to stem off. But, you know, right now, according to that metric, we would probably have to get between 15 and 20% on the 10-year bond before it would actually crush this inflation. But at the same time, what we've already seen is the market pricing in what the Fed's doing. They've pretty much priced in these first couple rate hikes. The first one was 25 basis points. And now the one that they're going to do today is probably going to be 50, but it might be 75. The market's pretty much priced in a 50 basis point rate hike. But I don't think they've priced in a 75. So if we see a 50 today, we're probably going to see the markets holding, because they've already priced that in. But if we see a 75 basis point hike, we might see the markets fall some. So that's the way it's going today. But back to my topic is why not deflation? Because there's a couple components here to this. And one is, for this amount of inflation to be stemmed off with prices going up because of supply side problems, because manufacturing is dropping off and things like that, for this to actually become more than just disinflation, which is the lowering of the inflation, and that's what we're going to see at first. Disinflation is just when the inflation is lessening. It's not deflation, but it's a lessening of the inflation that we already have. It's disinflation. So we'll probably see some disinflation first. We might actually be headed toward that very soon as markets fall off and as rates go up, which is a tremendous factor at slowing down or cooling the economy because people don't lend or borrow as near as much, which is a major means of credit creation within the system, which is basically being cut off. Lines of credit are being reduced tremendously within the system. This inhibits the flow of money within the system. In order for this to make an effect strong enough to be more than just disinflation, but deflation, we have to get to a point where it's going to be actually extremely painful in the markets. We'd probably have to see the markets fall off. Well, we'd probably be looking at a Dow, instead of in the 30,000s, it would be in the 20,000s. And a tremendous amount of pain that would go with that, significant amount of pain that would go with that. But not only that, the inflation that we already have would then start to cool rather rapidly because people aren't making purchases like they were before. And of course, when you don't make purchases, what happens is prices drop on things. But that still wouldn't yield us the deflation. It would yield a lower rate of inflation. In order to get to actual deflation, where prices start to actually reduce on things, the pain would have to get to the point of being significant like the Great Depression of the 1930s and a massive fall off in the markets. Like I say, probably below 28,000 in the Dow Jones. And then, what's more is, the Federal Reserve and the banking system would have to stay the course. They'd have to not waver on their policy of reducing their balance sheet through quantitative tightening and also raising rates even higher, which puts an undue strain on them to service the enormous debt load that's out there. So, the political will to do that, to get to the point where the economy is starving for oxygen, basically. In other words, it's being strangled, the economy, and it's starting to turn downwards quicker and quicker and quicker, and to have the political will to sit there and watch that happen, while you see that the people then at that point would start to go into a, how can I put this, very, very troubling. It would be very, very damaging for the economy and for jobs and everything else. What would be happening at the same time and all this is happening and they're holding pat is it would basically, we'd have to be in a crisis situation with the economy and them to have the political will to just stand there and not do nothing and continue with this this tight monetary policy with quantitative tightening and raising rates. They'd have to continue with that even when everything's turned down. See, right now, everything's rosy. Everything's fine, more or less. They can call on their strong jobs report and they can say, oh, we got a powerful, strong economy right now and we're not in a recession and everything else. But when things start to really turn down, it becomes completely obvious, and they do not have the political will to stay with the course. It's truly my belief that they don't have that political will to stay with the course. But they would have to stay the course. And then, now this is the kicker to all this. If they did stay the course then, and we started to move toward deflation, it would not be something that's slow and drawn out. The deflation would rapidly turn and become much more than they could possibly handle at that point. We would undergo a bursting of all of the bubbles that have built up in excess over many, many years. It would be a catastrophic event that would start to unfold then at that point in time. And that would absolutely demand a change in policy. In other words, more stimulus measures. Not just, it would not be just monetary policy, it would also be more fiscal stimulus and on a massive scale than at that point. So, no matter which way you cut this thing, even if they were to stay the course and keep raising rates and keep doing their quantitative tightening, ultimately it's going to lead to a change in direction. It has to. Otherwise, the whole system would basically stop and they would lose power. I mean, quite literally, lose authority, lose power over the system. It would be they would have to stand there and watch a catastrophic event unfold and not do anything about it, not and stay the course. It's absolutely unimaginable that they would have the political will to chart that course, knowing that it would basically remove them all from power. It just ain't gonna happen, guys. It's a no-brainer. And the inflation's gonna wait them out. That yes, they might, if they're very successful, they might moderate the inflation slightly with disinflation. But it's gonna wait them out. It's gonna wait until they turn and change directions and start to go back to an easy monetary policy. And I think it's going to happen one heck of a lot sooner than later. And this is what we're preparing for on this channel. What I'm getting you guys to prepare for is the fact that all this is going to change direction. And are you prepared for that? Is your portfolio, is it out of dollar denominated assets, and is it in assets that have no counterparty risk associated with them? Because when this system starts to, things are going to get dicey pretty soon in the financial system. Very dicey as the next rate hikes start to come in. And the next one might be a 75 basis point. And when they start pricing that in, we're only going to see the markets go lower. This is a game of chicken that the Fed's playing. And they're going to have to swerve, or there's going to be a monster of a crash if they don't swerve. And they will. They will ultimately swerve. And then we're going to have our inflation. I mean, you guys are saying have our inflation. Inflation's already here. But I mean the big time inflation. The panic inflation. When everybody realizes this game is really over. And right now, their hopes are on the Fed. Their hopes the Fed can change directions and bring about a strengthening even more of the dollar and dollar-denominated assets. A strengthening of people are going into cash right now. And they're going to continue until basically the Fed's in control of all this. Is basically what I'm telling you. And they don't have the political will to follow through on this. It's going to break. And so what we're watching on this channel is because when we're at the lowest ebb of all this, equities are probably going to be a pretty good buy again. But they probably got a ways to go down yet before the Fed breaks. You know, and we're looking for that bottom. And then a move back up again. Anyway, we're going to get the charts started right now. And I think I've tried to explain to you guys why it's not going to be deflation. Why ultimately it's going to be inflation. But yes, we could have a move toward disinflation that's rather furious. In other words, a weakening of the inflation we already got, moving toward deflation. And if we do get any deflation, it's going to be very, very short-lived because of the crisis it's going to cause within the system, and then a Fed reaction. So, I would not put my money on deflation at this point in time. I would put my money on inflation because it's a much more likely candidate in the long run. You see, you got to look ahead and past what's happening right now, past what the Fed's doing right now, to what they're going to do in the future, what they're going to be forced to do, absolutely forced to do in the future. So let's start the charts right here. Take a look. What we're looking at is the silver price today at $22.38. It's down 14 cents. We're going to take a look at gold. Now, just like the markets, gold and silver ain't doing so good. And gold's at 1868 right now. It's down 30 cents on the day. Let's take a look at cryptos and see what they're doing. What we're looking at is a Bitcoin price of 39,007. So Bitcoin's picked back up just a little bit. It's not in the 38s anymore. I'm surprised, how good crypto's doing through this disinflationary period that's coming in waves. Each wave is exactly timed to the Fed's rate hikes. So, or just before, while they price it in, each wave. And it's going to continue to come until the whole thing starts to roll over. And that's when the Fed's going to change directions. That's what we're watching for. Let's take a look now at the Dow Jones. And it's up 65 points on the day at 33,098. Now, we've seen it roll down. I mean, it was 36,000. And now it's 33,000. I'm going to tell you, we've seen it roll down some, the Dow. And this is directly related to what the Fed's been doing. Direct correlation. But they price it in. They always price it in a little bit ahead of time. And so when the Fed finally does what they're going to do, it's already been priced in. So I would say that they've priced in a 50 basis point rate hike today. Probably haven't priced in the 75. Okay, let's take a look at crude oil today, and it's up $4.27. Now, that's a massive move in the price of crude. That's over 4% today alone. That's going to be reflected at the pumps. Move index today, 126. We've seen a little drop off of the move index, but if we look at the overall chart over a year, we can see it's just consistently up, up, up. Let's take a look at bonds and rates today, and what we're looking at is basically a small movement upwards in yields, except for the 30-year, which is a very tiny move down. We're looking at the U.S. 10-year at 2.97 and the U.S. 30-year at 30, or 3%, I should say. Now we're going to take a look at the U.S. dollar index at 103.22, and it's falling off today. Just a little bit, only marginally. Now, of course, the dollar's not going to fall big. Well, first off, the dollar's being compared against a basket of other fiat currencies like itself, and it's the best one. And the second thing is, the dollar's not going to fall off big because what we got is the Fed's got its back right now. Now, how long is that going to last once the system starts to fall apart? That's the big question. It's kind of like somebody saying they can do something, They talk a big game. But then when the push comes to shove, they cave. In this case, the stakes are so high. The stakes are absolutely enormous. The stakes are the entire system coming down. That they're forced to cave. It's the same thing that they do with the debt ceiling, right? I always talk every year that, the debt ceiling's coming around. They might not pass the new debt ceiling, and the world's going to cave in. The financial system's going to collapse and everything because they're not going to raise the debt ceiling and all this kind of stuff. What do they do at the last minute every time? They always raise it. This is exactly the same deal, guys. The Fed's talking about tightening. They're going to cause deflation, blah, blah, blah. But when push comes to shove, they're going to do the same thing that they do with the debt ceiling. on this. And, don't be taken for a fool. Don't get out there and say, hey, I'm going to hoard cash, and I'm going to keep all my dollar. I'm going to sell my gold. I'm going to sell this and sell that because it's going to be deflation. Don't be fooled. When push comes to shove, they're going to do the same thing. They're going to cave. And then it's going to be inflation. And you'll be caught with your pants down. Because you've got all these dollar-denominated assets, and the flood of dollars is going to come in then at that point. They're going to dump the dollar, in other words, at that point. You'll be caught with your pants down, and you won't have any of these assets that you need. Because this is going to be the big one. This is going to be the skyrocket for gold and silver and cryptos that you've been waiting for all this time. And don't be fooled, because they've been able to maintain this so long. The price suppression on precious metals, they've been able to maintain it so long using these bullion banks and using the derivatives products. And they've been able to prop up the dollar for so long now that people start to think to themselves, hey, this will never end. This is going to go on forever. And yes, it will go on until it doesn't. Thank you guys for listening. Like and subscribe. And remember, you got to have a lot of patience in order to succeed sometimes in this world. It's not one of these things where you can just snap your fingers and it happens overnight. And that's the way with holding gold and silver. You got to have a lot of patience. You've got to hang in there for a long time, but you will be rewarded ultimately in the end. In fact, you'll be rewarded because you might be able to eat where other people won't. And then you'll say, oh my goodness, this situation is really, really dire. Because I'm going to just talk about one more thing here that probably a lot of you have not thought of. Okay, what happens? You get your hyperinflation. And what happens is the people out there, it's like you used to be able to be productive. You used to say you wanted to build something or do something. You used to be able to go like to the hardware store and buy all the things that you needed in order to build, say you're doing a project or something. And this is part of human productivity. Say you're wanting to put in a garden or whatever. You go and you say, well, I need to put in this 2-acre size garden, and I'm going to produce food and sell it to the local grocery store. Maybe tomatoes, say tomatoes. Okay, I'm just making all this up, but this is how it works. So you'd say, well, I need a rototiller to till the soil, or I need a plow. And you go in, it's affordable. You're able to buy it. But what happens now is you go to the hardware store or whatever, you can't even buy one little bag of merchandise. It costs so much. It's like you're buying gold. So what happens is that people get poorer and poorer. They can't afford the things that they need to be productive. And because of that, then they don't produce anything anymore. They become reliant upon the government for everything. And in fact, as they lose jobs, more jobs disappear that were spin-offs of the other jobs, and then the government has to get in there and take care of everybody, ultimately, and send them checks or whatever, because they don't want them to starve to death. But they don't produce anything anymore, and they don't work anymore. And the system starts to actually shut down piece by piece by piece. So the government sits back there and says, well, we got all these people that are on the dole, very few people working, so the government then starts to only support the parts of the system, ultimately, that people are still working in, the necessary. See, it's like this. The same thing happened during the COVID crisis. It was only the necessary parts that they kept running of the system. But ultimately, in the end, as hyperinflation hits and the world becomes less and less productive, you get more and more of these people that aren't actually accomplishing or feeding anything back into the system. Well, this makes prices go higher. It's an effect that is self-feeding or self-perpetuating within the system. And ultimately, it leads to millions of people not working anymore, but prices going exceedingly higher faster, and they can't afford anything anymore. And so the government then has to send more money out to support these people. But it's a vicious cycle, the hyperinflation thing, and it's hard to break. Countries like Venezuela can attest to this. And this is with the rest of the world not in a hyperinflation. A worldwide hyperinflation ultimately is very hard to break, and the governments out there are going to continue because they are supported by the system, that the Ponzi scheme that they've created. It's a totally bad situation. And sadly to say, it looks like that's what we're headed toward. And the only way you can preserve your purchasing power in that kind of a situation is with precious metals or cryptocurrencies, because all of the fiat currencies are going to go downhill, or with things. I had somebody ask me on my show, hey, what about pennies? Well, if they're real copper pennies, those are great. If you can't afford gold and silver, go out and buy a 50-cent roll of pennies each week or whatever, and sort through them and pick out all the copper ones and put them away for yourself. That's a lot better than nothing. Anyway, listen, thank you guys for listening, guys. Like and subscribe, and we'll catch you guys in the very next show. Bye-bye.